This video is on the technical analysis of Euro USD, and at this point in time we find ourselves on the monthly chart. And in regards to the monthly chart, we can see that we had this huge multi-session M structure over here, or double top, which had a neckline at that level more or less. And at this point over here, we saw the market pushing further down below that neckline and then heading back up to the neckline to test it. And at that point is where we should have looked for those potential selling opportunities. However, we saw at this point the market giving us a further stop hunt to the top, and chances are at this point we're going to see the market move further down to around this level, which is the previous support level. And at this point in time, as I said, we should be looking for potential selling opportunities at this point, in my very humble opinion. And that is because, as I've just said, guys, we have this huge structure, which is an M structure, and the neckline is at that point. And at this point over here, I believe we should be looking for those potential selling opportunities, and take profit should be around this level over here, which is in line with this low over here, right? Anyway, from here, let's head down to the weekly chart. And on the weekly chart, we can see that as much as on the monthly chart, we had this huge M structure with a neckline at that point. And I said to you guys that at this point, we should be looking for those potential selling opportunities. If we can just zoom in, we can see that where we have that neckline, which is around this level over here, we also have a double top, right? Which also motivates for why I say that we should be looking for those potential selling opportunities, and that our take profit should be around this level over here, which is in line with where this smaller M structure actually started, right? And we want to see the market actually move further down to this level, which is in line with where it started, right? Anyway, this M structure also has a neckline at that point, and ideally we want to see the market closing below that neckline, heading back up to the neckline. And where we have that neckline is where we should be looking for those potential selling opportunities, and our take profit should be this level, which is in line with where it started, especially if the neckline aligns with any key numbers that we have on the Fibonacci Retracement tool, right? So what I'm going to do right now, guys, is just add a neckline for that smaller M structure. Let's have a look, right? Another reason that motivates for why I believe that we're likely going to see the market move further down is because we have this candlestick over here, and what it is a bearish candlestick which has a small body and quite a long lower wick, right? And where that wick ends at the bottom, we have a lot of liquidity there, and liquidity, as you guys know, is money that needs to be triggered by the market at some stage, right? So in the future, we will see the market coming down to this level to trigger that liquidity, because the market will always go to where the money is, right? Anyway, let's continue. What else do we see on this chart that we should be paying attention to? Another thing that I also want to show to you guys is that as much as we have this M structure over here, just note that whenever it comes to these M structures, what normally happens is that a lot of traders and investors sell on the second leg of that M structure, and they place their stop losses just below, right, or just above rather. So what may possibly also happen is that we may see price move further down to around this level, which is the neckline of that M structure, and also a very strong level of support. And at this point, we might see the market actually move further up to stop hunt all of those stop losses that are located within this region, right? So just bear that in mind as we proceed, because that's also a possibility in as far as Euro USD is concerned, right? Anyway, what else do we see, guys, at this point that we should be paying attention to? At this point, really, I don't see much, so what I will do is head down to the daily chart. And here we are on the daily chart. Let's have a look. And just to recap, guys, remember, on the monthly chart, we spoke about how we have that huge M structure, and it has a neckline at that point, right? We saw price break to the bottom side of that neckline, heading back up to the neckline to test it. And at this point over here is where we have another M structure, which also has a neckline at that point. And I said to you guys that ideally we want to see the market actually closing below that neckline, heading back up to that neckline. And at that neckline is where we should be looking for those potential selling opportunities, and our take profit should be more or less that level, which is in line with more or less where this M structure actually started, right? Keep that in the back of your mind as we proceed. Another thing that I had also mentioned is that we have on the weekly chart that candlestick that is carrying all of that liquidity, and I said to you guys that liquidity is actually money that needs to be triggered by the market at one point or another, right? So here we are on the daily chart. In regards to the daily chart, I'm going to start off by adding my daily channel. Let's have a look. And just remember guys that whatever drawings that we do indeed add to our charts need to be as accurate as possible, just to ensure that ultimately when we do execute, our execution is also very much in line with our drawings and our analysis, right? So we could say more or less that this is the channel that we have in regards to the daily chart, and let's zoom in and see what's happening, right? Let's have a look. Right. Remember we spoke about how we have this M structure over here, right guys? And I said to you guys that we want to see the market actually closing below this level, and once that happens, chances are we're going to see the market move further down to around that level that I spoke about, right? But let's zoom in and see what's happening on the daily chart, right? Let's have a look. What do we see on the daily chart? On the daily chart we can see that as much as if I can just zoom out a bit, as much as we have this line over here, or this area being the neckline of this M structure, remember also that this line or this area is also a very strong level of support at this point in time. And what may possibly also happen is we may see the market actually move further down to test this area and then move further up, because as I said, it's actually a very strong level of support, as we've had multiple rejections at that point. But just to zoom in, what else do we see that we should be paying attention to? Another thing that I see that is also very much important is the fact that we also have an opposing structure in the form of a triple bottom over here, and it also has a neckline at that point. So triple bottoms are very much similar to W formations in that they too have necklines, and once the neckline has been broken to the upside, we expect price to come back to the neckline to test it, and where the neckline is generally where we look for those potential buying opportunities, especially if the neckline aligns with any key numbers that we have on the Fibonacci Retracement tool, right? So at this point what I'm going to do is add a neckline for that triple bottom, and just bear with me guys while I do so. And we could say that more or less this area over here is the neckline of the triple bottom, and just remember that necklines are areas and not so much lines. And yeah, so the next thing that I'm going to do guys is to add, or rather use the Fibonacci Retracement tool just to see if that neckline actually aligns with any key numbers that we have on the tool. So let's have a look guys. So there we go, more or less, and we can see that the neckline, of this triple bottom actually aligns with the 61.8% Fibonacci retracement level. And what this means is that at this point over here, we should potentially be looking for those buying opportunities, right? We should be looking for those potential buying opportunities, right? And just to recap guys, remember we had also spoken about how we have this huge M structure, and now I'm saying to you guys that because we have this triple bottom over here which has a neckline over there, ideally we should be looking for those potential buying opportunities over there, especially because also remember we're in an upward trending market, or in an upward trajectory, so it makes sense that at that point we should be looking for those potential buying opportunities. And that is because we have confluence. Number one, we have this triple bottom. Number two, we have price breaking to the upside of that neckline. Number three, we have price coming back to the neckline to test it. And number four, we have the neckline aligning with the 61.8% Fibonacci retracement level. And remember that the neckline is also a very strong level of support, and where the neckline is where we should be looking for those potential buying opportunities, right? Anyway, let's proceed. What else do we see guys on this chart that we should be paying attention to? Another thing that I also want to point out is that as much as we have this triple bottom over here with a neckline over there. We also have a triple top over here, which similarly has a neckline more or less over there, right? So even if we do find any buying opportunities at this point, I believe that our take profit, if we do find any opportunities at this point, should be around this level over here, right? Why do I say so? That is because, as I've just said, we have this triple top and it also has a neckline more or less at that level, right? So I'm just going to add a neckline for that triple top as well. Let's have a look. Right, so we could say that the neckline of the triple top is somewhat over here, more or less, right? And then I'm just going to utilize the Fibonacci Retracement tool just to see if that neckline actually aligns with any key numbers that we have on the Fibonacci tool, right? And let's have a look, let's have a look, let's have a look. And we can see also that the neckline, which is over here of this triple top, aligns with the 61.8% Fibonacci retracement level. So what this means is that, let me just delete this. What this means is that if we do indeed find any buying opportunities at this point, which is where we have the neckline of this triple bottom, our first take profit should be around this level over here, which is also the neckline of this triple top. And at this point over here, where we have the neckline of the triple top, we may potentially at this point look for further selling opportunities, right? We may potentially look for further selling opportunities, but just keep in mind that, if I can just zoom out, just keep in mind that earlier we spoke about how we have this huge M structure, which has the side as the second leg of that M structure. And I said to you guys that what normally happens is that a lot of traders and investors usually sell on the second leg of that M structure, and they put their stop losses just above. So we have a lot of stop losses at this point, right? We have a lot of stop losses at that point, and we might potentially see the market actually disregard that neckline of this triple top, move further up, grab all of those stop losses, and then only move further down, right? But just also remember that I spoke about how the anticipation at this point is for the market to actually move further down to complete this double top over here, right? So that is it in as far as my analysis goes for Euro USD. I hope it makes sense, and peace out.